Every trade you take must answer these four basic questions. So I'm going to be using something very relatable like embarking a journey in my analogy. So before taking a trade, these are the four basic questions that must be answered by you before you click that button. So the first question is a question of where you are going to. Are you buying or selling? So in this case, I'm going to be using a case in point like going to Aba or Owerri. So imagine you wake up one morning, you know you have to travel, but you don't know where you're going to. I mean, if you don't know where you're going to, every road leads to your destination. So you have to be very sure with no ambiguity, with certainty that this is where I'm going to, right? So it's only when you have answered the question of whether you're buying or selling before you can answer, okay, now where should I expect to take my buy or to sell from, right? And this is a question of which park would you be going to board, right? So if are you using Peace Mass Transit or are you using God is Good Motors? This is specifically for my Nigerian audience, but I believe that anybody could relate to this. So this is a question of the location where you'll be boarding from. So once you have answered this question, the next question is when to actually click the button. So just because you're in the park doesn't mean that the bus will leave immediately. So you have to wait. You could be waiting for passengers or be waiting for something, but the bus wouldn't move immediately. So this is a waiting time where traders really miss it. Just because you want to buy or sell, don't just click the button immediately you open the chart. So you have to wait for something. And the next one or the last one is your destination, which is your take profit. So let's put this together so that we would understand it. So the question of where to buy, are you buying or selling, is a market structure analysis question, right? Are you buying or selling from the higher time frame perspective? The next question there that must be answered is where to buy or sell. So this is your point of interest, and it makes sense for your point of interest to be in alignment with premium and discount, right? Because it makes sense to buy cheap and sell expensive. So this is something that you must have to consider. That is where you can now begin to look for inside your premium or discount the PD arrays like fair value gaps and other blocks. And the next question there is when to buy or sell. You don't just click the button immediately you open the chart because you've decided to buy, right? So this is where the concept of liquidity would have to be studied. So you have to wait for liquidity, and then different entry models. And the next question, which is the last question, is your take profit or exit, which is your destination. So let's put everything together. The first one is the market structure analysis that tells you whether you're buying or selling. And the market structure analysis, that is when you determine the trend of the market, who is in control. Is it trending upwards? Is it trending downwards? Or is the market ranging? So if the market is trending upwards, it simply means that buyers are in control. The market is making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And this is the real market charts that I put here. All right. So if this is happening, it means that buyers are in control and you have to be buying. You have to be in alignment with the dominant side. Trading is not about, prediction. It's about alignment. Or is the market trending downwards, right? So what it simply means is that sellers are in control, making lower highs and lower lows, lower highs and lower lows. So when you see something like this from a high time perspective, it means that sellers are in control and you want to be selling. Or is the market making equal highs and equal lows, meaning that it's ranging, giving equal opportunities for buyers and sellers, right? But either way, you must have to decide where you're going to. And the next question then once you have determined your market structure analysis that you're going to be buying is to look at the premium and discount zones, right? So the truth of the matter is that for you to be profitable, you have to buy cheap and sell expensive. That is why you have to determine these zones. Very, very important. The reason why this must be so is because before market goes up, it comes down first. So imagine that you've not marked these zones and then you open your chart and market is, coming down. If you don't know where you're going and don't know where you want to buy from, you could think that market is actually selling, right? So because market goes up, it comes down first. That is, how market is wired to function. And then conversely, before market goes down, it goes up first. This is why you must decide where you are going to so that you're not going to be faked out by the fact that market is going up since you've already made a decision to sell. And once you have done that, mark your premium and discount zones, your point of interest. This is when you begin to look for your premium and discounts, arrays inside the point of interest. So that's where you begin to look for fair value gaps, order blocks, breaker blocks, and all of that. In this case, a bullish fair value gaps, bullish order block, bullish breaker blocks, or you're selling rather, and then you begin to look for bearish fair value gaps, order blocks, and breaker blocks, and all of that. So once you have done that, the next thing is for you to wait before clicking the button, and that is the study of liquidity. Now, the truth of the matter is that without this, market rarely moves. So that is why you have to wait for the market to tell you when to click the button. Now, liquidity is nothing but, a study of where stop losses are located, right? People always complain that market takes them out before going in their intended direction. Now, the reason why that happens is because of liquidity. Liquidity is just about, getting to where stop losses are located and taking all the stop losses there. So now stop losses are located above equal highs, swing highs, above swing low, session highs, previous days highs, and previous days lows, above resistances, right? So that's buy side liquidity. And then the sell side liquidity as stop losses that are located below swing lows, below equal lows, below session lows, below support, and below previous days, lows, weeks, and all of that. So you have to wait, right? You have to wait for this to happen before you actually click the button. Or internal liquidity is small highs, small lows, and minor pulls back. And then you have external liquidity, major swing highs and major swing lows. So the start of liquidity will help you to stop chasing breakouts. It helps you to trade reversals with confidence and know where price is likely going. And the next step is your take profit. Once liquidity has happened and you've clicked the button, the next question is, where is the price going to? And that will be your target. And price usually go to the next liquidity pool, and that should be your take profit. Now, what it simply means is that in the case of embarking in a journey, not everybody will stop at main park. Some people will stop at Tosisioma. Some people have different locations where they'll stop, and you have to also decide based on how you trade where your destination is. If the market can go way beyond where you are taking your profit, but you have to decide where your take profit is. So these are the four basic questions that must be answered before you can click that button. So if for any reason one of these boxes is not checked, don't take the trade, right? But if all the boxes are checked, take the trade. Now if you lose, that will be a very good loss. I mean, if you checked all these boxes from your analysis. But if your analysis you're not sure of any of this, please don't take the trade. I hope this makes sense to you, and I hope you find it very helpful. Maybe next time I will break this further down, to explain how to really identify this. All right.